Hey there, traders. This is Shane, and I'm going to finish off this week looking at the pound US. The series of videos that we're doing here. What you see right now is just a 60-minute time frame of the pound US, just to give you a look at the type of conditions that we were facing during this entire week. You can see here's the 27th right here, just ranging back and forth, and then on the Tuesday we had this big move, right? This big sell-off, some partial buying, and then just kind of drifting price action. Not bad here. We get into this little chop into this area right here, and this is the we're into the U.S. session. This little area here, nice drop off right down here. That did okay in the U.S. session. Here was the London session for that day. Kind of not too much going on there. Nice drop off down here, and if trailing was part of our plan, this would have been a fabulous day. But if you remember, the reason we're doing this video, this series of videos, is just keeping things nice and simple, nice and easy to start off with. These moves are going to happen over and over again. All right, so if you missed it this week, it doesn't matter. They'll be here next month, next year, if we're still trading, next century, for the regulations that are coming down the pipe anyway. And here's the final, here's the Friday. There's our London session right in here. And then, chopping on Friday. This is also the day that Bernanke was also speaking. No, I'm sorry, that was back over here. There was news here at 10 o'clock. And then, Fridays are just, they are what they are. All right, so it's just a little overview of what kind of markets we faced. Just looking at that right there, you can't really see much of a trend going on whatsoever, just some slopping back and forth. So overall, it wasn't a stellar week. Still ended positive for the week, which is the key more than anything. And on this video, we're going to show you a few things that you might want to consider in your own trading. All right, so let's just pick up the chart and we'll get going. Okay, we're going to start here on Thursday, London session. It's 2 o'clock news. We have this setup here that occurs, it starts printing during the news, but doesn't really get into the action until well after the news comes out. Now, we've talked about looking to the left, seeing what we're trading ourselves into, making some smart adjustments, and then there comes a time when you have to say, you know what, there's just too many roadblocks in the area, and that's what we've talked about throughout every single video we've done. I've done on the pound US, the series. Now the entry price on this is a 58.23. Okay, we've got a directional to adjust around. We have this to adjust around. Then it brings us right down into about 58.07. Right, that means we've got to push our targets out. That's what we want to do. Problem is, we've also got the keyed level here of 5,800. So we'd be adjusting ourselves right into the key level of 5,800. And to get down to our trade management area, we got so many roadblocks in the way. All right, so this trade is a skip. Now, these trades can easily work out. Okay, but what we're looking at is probabilities. That's what trading is all about, right? Probabilities, putting them in your favor. And if you're trading into a massive amount of roadblocks where prices can, run into some difficulties, well, that's lower probability type trading, right? So if you have there's certain levels that are keyed. There are certain things that, are not really important, especially when you're looking at a 6-range chart, But let's just move forward here. Now, here's the one where the adjustment, kind of doesn't work out very well. You'll see this trade sets up at 58.46. Yeah, there's a 50 level there. We've also got this swing level up here. So actually 58.56 was this adjustment. So remember we said, we're looking for a 10 pip adjustment maximum because we're going to push our targets out anyways. And when currencies tend to break certain levels, there's always this little rush going on, right? Mostly these breakout traders. So we're only looking for 15 pips to get to our trade management area. All right, that's all we're looking for. So generally, when these things break out, I say generally because it's not 100%, right? I don't know the exact percentages, but if you think about it, breakout trading is a big thing. The breakout, trade the pullback, but there's breakout traders there. So what we would like to see happen is getting that breakout, buyers taking us to our trade management area. That's where we can get rid of the risk in the trade. All right, that is the key, is cutting down the risk as soon as possible. And that's why we want to make sure we're not running into too many roadblocks on the way to 14, 15 pips, so we can adjust our stop, take the risk out of the trade, and whatever's going to happen is going to happen. But in this case, well, the original setup goes to full target. The adjustment gets basically ticked in, pulls back, takes you out at this level here at 22. Now the stop was here, but once we get a trade printed the opposite way, that's going to be our stop, right? Now there's also this line here, and I marked this off because there's a trade right here as well. That well, it's one of those things. It's a little bit better than this trade, right? But the adjustment keeps us out of this trade. Now this trade gets doesn't really go anywhere and gets stopped out. So it's the same thing. We missed the winner here. We get stopped out, right? This trade here with our adjustment keeps us from taking a loss. All right. So you can see it balances itself out, and that's the whole ball game right there. All right, let's just keep going forward. So we got one stop out, right? We skipped this trade, we missed this trade, and now we're looking at this trade here. We're making our adjustments, right? This adjustment pays off, right? We've adjusted around this top here. Remember, what happened is the price came up, couldn't break through, fell back. Price came up, couldn't really break through, and fell back. This time it breaks through, takes us to our full target of plus 19. So that's going to be it on the session, because these start coming in after the 5 o'clock cutoff time. So you know what? 3 pips down on the session, right? But you saw, I showed you the hourly chart and what kind of price action we were looking at than the pound US. So not a stellar day, but you know what? The key, what we do, we minimized losing trades. We took advantage of the winner. Basically, that's all you can really ask for. Probabilities, right? So let's check out our US session and see how we fared in there. All right, we come into our US session. We've already got a short trade that triggers in, and the way it's printed out goes to target. Now, we talked about re-entry trades. Don't want to be too aggressive with re-entry trades, right? If we're looking for a short, we want to see it come into the buy zone, right? We want to see this kind of play right here. And as soon as it comes out of the buy zone, which is right in this white area right here, you see this line right here, it's our setup, but we're going to adjust around the swing level. What happens is it comes in, but it goes right back into the buy zone, right? So that trade comes off, comes back in right here. Same entry price, full target of plus 19 pips in the US session, right? And nice early morning, while people are still, fixing their coffee or still en route to work, you're done with the day on the US session. All right, so let's move forward to Friday and end the week, then look at some more stuff. I just marked off some news here, some stuff to pay attention to in this area right here. 5807, it's a pretty key area right there to adjust around. Eventually it does work out, even the full trade works out, right? But like we said, probabilities, actually there was a little bit of consolidation here. But here's the good thing about this trade.